What's up everyone, and welcome to another Bitcoin market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with Bitcoin on the monthly time frame. We're going to go through and look at the trends for each of these time frames to put things into perspective. Right now on the monthly time frame, we have a bullish trend here with a low, high, higher low at 98.21, and then higher high. Now that higher high ends up here in April, and now we're coming down to potentially form another higher low. I'm going to get rid of that because that shouldn't have been on the monthly time frame. And if we're a bull, we're looking to buy the dip on the monthly time frame for a potential higher low here before we go up for either a lower high or a higher high to continue the trend. So let's go to the weekly and look at the trend there. So on the weekly time frame, if we're reading price action here, we have kind of a weird situation here where the high of this candle breaks the high of this candle. So the way that you would really read this is you have a high, low, lower high, lower low, higher high, lower low. So it's really a weird situation where you don't really have an established trend. You have a low, high, lower low right now. So we don't really have a trend established on the weekly time frame. It's kind of weird. It appears, if you're reading the candle bodies, then we have a bearish trend. But if you're reading the wicks, which is what I do, we don't have an established trend on the weekly time frame. Go to the daily time frame. I'm going to get rid of this briefly. Daily time frame, we are in a bear trend from right here when we had our a high, low, lower high, and then lower low. And then we continued that down to here until we got a lower high and then a higher low. So this is a difference between what we saw in this area right here. So here we had a high, low, lower high, and then lower low. Here we had a high, low, lower high, and a higher low. So the bears weren't able to push the price down right here as much as they were when we had the bear trend right here. So this is actually bullish. This is pretty significant that this higher low is here. But now we need the bulls to then form, because they just formed a lower high, the price is just consolidating here and getting tighter and tighter. So whichever way it ends up breaking out is going to be very significant. So we're either going to break out significantly to the upside and probably go up to this gray level here, which is our main resistance level. This is from the 3-day time frame. So if we look at the 3-day time frame, this is our resistance level because we had 2 support tests on it right here back from March 2nd. So if we go up into that, that is where we will be looking to potentially go short. But if we look at this from a daily perspective, we talked about this gray zone over the past several days. We finally got some candle closes below that, and I said this is where a short is potentially playable with your entry. You can either do your entry on the body of the candle right here or the bottom of the wick of the candle, which is the bottom of the gray zone. So let's assume that you did it from the body of the candle, which is up here. If you were to do that and put your stop loss above, which is right about there, it's around there, and pull this to where the price went to down here, you would have made about 8.7% on that trade. So that was a trade we talked about on this channel. So congratulations to anyone that took that trade. That was about an 8.5% profit potential. And on margin, even more. So now we need to see the bulls potentially form a higher low and then come up and form a higher high to change the daily trend back to the bulls' favor. Go into the 4-hour time frame, John. The proverbial John. I don't know. I just always use the word John to describe any random person that I'm pretending to talk to. So on the 4-hour time frame, we actually have a bear trend, which is not good for the bulls in forming a higher low. we had the bull trend right here with a low, high, higher low, and then higher high. We got another higher low, but then we got a lower high and then lower low here. And we pushed right through and got 2 candle closes below this gray support zone right here, which is why I have some short entries posted up here on these pink lines, one on the wick of the candle and one on the body. The way that I am playing this one is putting my stop loss right above, the way I play every support resistance zone. Put my stop loss right above, because if we go above that zone, we know that this resistance zone is obviously not valid because we went above that. And so this one, we're really just targeting to form a lower high below this one right here. So this is really just a scalp. This is what we consider a scalp. If you're not familiar with that terminology, it just means a very short time frame trade. We're on the 4 hour, so this will play out over the course of a day or two. Where you get, your profit potential is probably somewhere in this range of consolidation. Maybe we could pull up the VPVR and see where this would lead us in this kind of zone of price. Let's see. It doesn't really help us much. It tells us, though, there is some confluence here with this resistance zone. You can see that there's a high volume node right in that zone. So that does give us some confidence there that this resistance zone will hold. I'm really not targeting any more than about 3.7% on this one. Still a good risk reward, though, with a tight stop loss of about 3. So it's a good trade. I'm looking for this one to play out nicely. We'll see. If we come down and form a higher low before coming into it, I won't take this trade. But if we continue to come up into this before forming a higher low, then I will still take this trade. So right now it's still valid. We'll see what we get. But yeah, bulls need to change this 4 hour trend back. What I do like about this candlestick right here is high volume, people buying the dip as we went down here. This right here was potentially a liquidity grab of this low right here. So what we'll do is we'll take our little check mark. We'll put that check mark right there, because we know that the liquidity below this low, meaning the stop losses that were below this low from people that went long right here, now just got triggered when the price dropped below that. And the bulls, the whales in the market, the big players that need that liquidity, pushed it down to this level, so then they were able to fill their positions without significantly moving the price, because a lot of stop loss is triggered down at this level. That's what's called liquidity, or a liquidity run. And so this is what we would consider a run on stops, and now we closed way back above that. So now we'll see what the price action does, but that's very bullish. The last thing I wanted to mention was the Ichimoku Cloud edge-to-edge trade. I keep talking about this, and it keeps not playing out. I mean, it was still a profitable trade from, here to here. So, the trade that I took, the edge to edge from here to here, I did take some profits on the way up. This is about a 3.5% profit. It wasn't very significant. We didn't obviously get to our targets, which is the edges of the cloud. We still have the potential of doing that now that we're back inside the cloud for the third time. I got stopped out here. Entered back here, didn't get stopped out, got stopped out right here, but I had already taken profit and moved my stop loss up. So I didn't really get stopped out here. I got stopped out below this low because I moved it up to this low because this support zone got established. So once we went through that support zone, got stopped out at the bottom of that right around 37.4, and now I'm not going to enter this trade again, but probably now is actually the time where it's going to play out, which would be pretty funny. So what I could see end up happening is us go into this level, reject off it once, and then go through this level. But we'll see. I'm not really going to enter into that. I'm not really eager to rush into that trade. There's a good setup right here for a short, so that's what I'm taking. It's important to note, though, after potential liquidity runs like this, that resistance zones sometimes do not hold in the first test, but I still like this zone, so I'm still going to play it for the short scalp trade. So that's all I got for this one, guys. If you like this video, give it a like down below. We really appreciate that. Subscribe for future educational content around cryptocurrencies and blockchain technology. And if you haven't already, check out our beginner technical analysis course if you'd like to learn all of the fundamental elements of how to generate consistent profits trading cryptocurrencies like Bitcoin, Ethereum, Dogecoin even, if you're really into Dogecoin, and other cryptocurrencies as well. We talk about everything from value analysis to reading trends to candlestick analysis to the bulls and the bears to several other interesting concepts, and you can get all of that on-demand content on any device and learn at your own pace. Using the link in the description below, you can get 20% off that course, and that's all I got for this one. So until tomorrow, onward and upward.